Hello and welcome to this July 23rd, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Boley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're looking at the XLF. This is the ETF that tracks the financial sector. A couple of things I wanted to point out here. First, this chart is actually a little different than the ones you've seen in the past. I've replaced the RSI and stochastics at the bottom with the relative performance of the XLF versus the S&P 500, so you can see how financials have performed versus the S&P 500, and then down below that just the S&P 500 performance by itself. And a couple things to point out here. Notice that throughout last summer we had a very strong financial group that actually made a pretty nice pop at the end of August and into September of 2009, and that helped lead the market to the upside. But notice when we got to October, the financials failed to continue moving higher. When we got in, we broke out on the S&P 500 in November. We broke above the 1100 level. Look at where the financials relative to the S&P 500, where they were performing. They were actually starting to underperform even though the S&P 500 kept going higher. Now that went on for about another month or so. It looks like the S&P 500 tacked on maybe about another 4% after that, and then the rally stalled, and that's when we went into a pretty significant decline. Lost about 10% on the S&P 500 back to 1,050. But notice as we kept moving lower from mid-January to early February, the financials on a relative basis actually were putting in higher lows. So this was starting to show us relative outperformance by the financials as the S&P 500 was breaking down. And then you can see from there the financials moved back up on a relative basis, and that led the S&P 500 higher. Now, one of the articles that I wrote at Stock Charts back in mid-April focused on the fact that the financials were starting to show weakness even though the S&P 500 was climbing to new highs. And that was an article that really started to show a warning, at least in my mind, a warning that the bullishness that we saw from the early part of February through the end of April may be coming to an end. And then it was another couple weeks later that we saw the NASDAQ and the Russell 2000 actually confirm those warning signs. So in pointing all this out, I just wanted to give you an idea of the relationship between the financials and the S&P 500 and how influential the financial group is to the overall direction of the market. Now let's move up above here and take a look at just the price action on the XLF. I think it's very clear that to the downside, the XLF needs to hold on to about 1340 to 1350 price support. We pulled back in August after making a beautiful move to the upside. We pulled back to this area, 1350 back in mid-August. We did it again in early February when the market put in this significant bottom. You can see that the XLF came down, hit this major price support. And then again in early July, we came back to this 1350 level. Notice these three lower lows with three higher MACD readings. So we had a positive divergence at the time we hit this price support. And as a result, we had a very nice pop to the upside in the XLF. So to the downside, it's clear that 1340 to 1350 is major support. To the upside, take a look at where we've had reaction highs. First, we came down off the April highs, came down to a close of 1505, bounced to the 50-day, and then broke down back below 1505, and we've gotten back up on 2 or 3 occasions to test this 1505 area without any success. So right now the XLF is buried between 1350, 1505. We closed at 1445 on Thursday. I really believe that whichever way the XLF breaks, either to the upside or the downside, you're going to see the market following suit. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.